Okay, I'm live. A little bit mousy, a little bit. Let me sort of let me get this. Let me sit higher also. So, oh, this is much better. Yes, 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 yes. Okay, the video is about technical analysis and predicting the future. So, why do I talk about this? I try to avoid it always. This is not advice. This is just about analyzing charts. I thought I found the secret sauce of predicting charts, and I have to say, yes, there is a very high return on now return on success on predicting the market. But the problem is you will have, this is the conclusion also with AI testing, the more accurate you are, the more you can predict the future, the less trades there are. So if you want to have the ideal prediction, you can only do one or maybe 3 trades a year. Some people do that like that and go in wild like a big, and all the factors, all the parameters have to indicators have to point to their direction, and then they go in and they make this 1 or maybe 4 trades a year. But you will get, if you trade a long time, you get a sort kind of virus, and you want to trade every day or every hour as soon as much as possible. And I think this is the first lesson. If you're a trader, you have to control the number of trades you make all day. Give up if it doesn't go. So the most important thing is try to limit your trades. Say first you just trade. If you normally do have course, you started a demo account and you find out you start to trade like 5 or 10 times, or this is then FX I'm talking about, or maybe stock. If you trade like a crazy lot, and after a while you get an average, because the more you trade, the more you go to the average. That's something you don't want, because the average curve is that you will go 50-50. If you go a million times of trades and you are good, you go to a 50-50 or you lose everything. That is the only thing you can, that is the statistically what it is. If you want to have a 70% or higher, it means you have to trade less and less and less and be more caution, and to go out more and take more losses, but that will resolve in more profit. Strange that it sounds like it, but this is how trading and prediction will work. Let's say also take small losses and take bigger gains, but often it is the other way around. You don't want to go out to trade, and if you go out to trade, it's very expensive, but at the end you can pay it back with small trades and you can recover it. Sometimes just make a balance. So that is not good, and that is something you have to learn. And the only way to learn is just to do it with small amounts of money. That is the trick. And you trade. If you're young, trade the demo accounts, or trade with penny stock, with penny, not penny stocks, but with penny amounts of money, FX. That is like your whole account is maybe $100, and you small trade. And if you do small trades, you have to more better prediction. So learn the chart, how it behaves. And if you are good, and if you are really good at trading, let me see. Can I share something? Can I share something? I don't know. I probably can share something, but is it here? Share screen. What can I share? Windows, entire screen. Windows. Okay, let me do that. Not now. I am working with. Maybe I can do it here. Let me talk. Windows. Oh, here. Okay. I will go try to share. Okay, here we see. Look. We see here a real chart, and you can see a little bit the setup with how I'm trading. So you can see that the big thing in the. Is this an arrow? About arrow? No. Okay. So you can see the big screen is euro USD, and then I have dollar N, and I have that dollar N is down here. euro N is above, and then here is euro USD. Why this? Because I'm in Japan, my money is in yen. So if the yen goes down or goes up, it has an influence on my the amount of positions I can make. So this is I guess you can see that is MT4 with the demo account. Don't look. So this is just a trade now. This is live, and it is running on 1 hour at the moment. But okay, let's explain what you see in the chart. You see that this is if you can maybe go 4 hours or 4 hours, you can see here, see all these dots, these lines. This is pivot points. There's a pivot all thing you can download from internet for MT4. These are the pivot points. This is you can see the cloud in there. That is the Ichimoku. And I have, if you go, I think you can see it better in 1 hour here. You can see that there are also Bollinger Bands. So you have an average and things, and you have a yellow line, and that is the 200-day Bollinger Band. I think it's 200 days. Let me look. Is this 200 days? Let me look. I can see maybe 50 days. So this is a 50 days. So this is my normal setup. So what is so important to understand this trading way? You can see that I use more than one indicator. If you go to daily, which is maybe too much, 4 hours, you can see I use often, if you look at the Euro USD, I use the pivot points. Why the pivot points? You can always see. I calculated this and I simulated with AI and test data from thousands of things. It will always hit every day the PP. You can see it is 90, not always, but always will touch it. So if you know the direction where it goes, yeah, you will always, you are above the PP and you know it goes down, you know that you can go down to the PP. If it goes up, like here it goes up, you know that probably this will go up. It's an upward trend. You say, okay, if it goes down PP, probably will go back up. You can see here there's a spike here, touching the PP and goes up again. Here again, it's still going up. It hits the PP. You think, oh my God, it goes wrong. It goes even to S1. Don't worry, wait, and buff, it goes up. And at least will come back to the PPs. Because, you know, if it goes an uptrend, the PP the next day will be higher. And if it wants to go to the PP, your chances, if you go even, if you would cut out here low, you keep the trade for the next day. But if the next day the PP is higher, it will go there and you can reduce your loss or you can still make a profit. So today also you can go easily up for, in this case. This is 4 hours, so probably you can go buy position. But this is not everything. You also have to look at other indicators, and you have here other indicators. Those are the Bollinger Bands. Bollinger Bands you can trim. You have some parameters you can trim, and the trick is you look like a week ago or 2 weeks ago, and you look that it stays in the Bollinger Bands. So your signal stays, your high stays at the top of the band, your low stays at the low of the band. That is important. 50-day work is just for an indicator for a little bit to have some other feeling. The Ichimoku cloud is also interesting. Ichimoku is not only a prediction, it is more the way of trading. If it is above the cloud, it probably will stay above. If it goes in the cloud, it can go to the down or to the upside. So now it is in the cloud, so the maximum down is here and the maximum up is probably here, and it is aligning with the PP. And then you have for the RSI and you have here the MACD. So you can see there is an uptrend, but the uptrend the RSI is going down. This is going up. This is in the middle, so you don't trade. That is the golden. But the PP is above, so you can ignore everything. You want to have all your things aligned. So if it here if the MACD is going up, the RSI is up. You're above the cloud. And you see also the candle forms. It has here a big one, it overtakes. So here you can safely to go up. And if it hits the Bollinger Band, there is an indicator that it can go down. Now you get here a signal that it goes down. It's the next day here in this conference. So it will probably go back to the PP. So here you can do a sell and you can probably go to the sell. Here it's a little bit up, but also you have to look at the news. Now there was an intervention, there are strange things going on. So on news you don't trade, or you know sure that the direction is known. And so always be careful. But there are things that are handy, useful, and these are the pivot lines, the Ichimoku line, and the Bollinger Bands. These are the basic things. And why? And also the other indicators. Why do I use it? Why do they work? Because people are using it. It's not a tool that can predict the future. It is a tool that a lot of people use and they react on it. For example, if if it goes to an R2 or an S2, it always bounces back because it is 100% oversold or undersold, and people will move. They are not moving it because that is the position. No, because people know it is R1 and they react on it. So why are they forward using these pivot points? The traders, if they begin, the only indicator they use is the pivot points. They trade the whole day. They calculate what's the previous day, and they trade on the previous day pivot points. They use this as an elementary trading beginning. So everybody that starts trading and still trade uses pivot points in the market, in FX. That is one of the things you have to find. You find out if you read a lot of books. That is the thing. Now, there is also something like if you have Euro USD, a lot of people that trade it in Japan and that trade it in Europe and trade it in America. So there are 3 zones. In the 3 zones, it moves differently. For example, in the Tokyo time, there was a Tokyo specific movement in there. Then English takes it over, Europe takes it over, and they go often against it. So they pull it, if it during the Tokyo it goes up, they pull it down or they even push it up. And America, again, look what happened in the Euro and Japanese side and does his thing. Sometimes it is influenced by news, and then I sure go out with news or just ignore it. But that is sometimes very difficult to do. But these are things you have to understand. So with news, you go out, you look at these indicators. There are 3 points of the day that are different in behavior. Some people only trade it during the Tokyo time. I trade only between the end of Tokyo and beginning of England. There's often one trade is there that I can make. And then sometimes at the end of during the stock market in America goes open, there's and sometimes on some news. Sometimes there is some news and it panics, it goes up or crazy down. And it because of Fujinachi movement, it will always go back. So if it goes up like to R1 or R2, it will always pull a little back. If you can time the top, you do a sell, you can make a little bit of profit and you go out. Also, another thing is you can also use automatic trading. You can put a buy for if it is an uptrend. You put a buy order on S1 and S2. If it goes there, it spikes there. You have there a buy position. Now, if the P1 is above it, it will pull up, and maybe the next one will pull up to that. So you can make in those 2 positions a little bit of profit. Also look at the form of the cloud, what it is going up or down. Don't look only at 1 hour, look at 4 hours, look at 1 day, and look at a month. Look if all those indicates that, look, here it goes up. You can see here that is an uptrend here in the weekly. The daily is it's in the cloud, so it will do nothing. This is up, so it will still go a little bit up. This is in the cloud, so you have this is don't trade. This is just, or you trade a little bit, a day trade of per hour for a little amount of. It is a range. Range you can make money, or if you have a trend, you also can make money. But if you have long trades, use little money. If you have short trades, you can use a little bit more money. But you have to be so diligent that you cut it if it goes the wrong way. And about the wrong way, if you have a plan, or if you see something, a movement. So, for example, we are now in 1 hour. You think it goes down to the bottom of the cloud, and it doesn't, or you have to wait a long time. It moves a little. Go out, because over time the parameters and data changes. Time goes, news is closer. Something will change in Europe. So your plan, when you make the plan or for your position or your strategy, only worked at the time when you made it. 2 hours, 3 hours, 4 hours later, this changes. So you have to reevaluate, or you just go out, wait. You say, okay, it didn't go my way, take a little loss, then wait again. So the perfect trade is you guess something. It has to happen within an hour or within a half an hour. It does it, exactly what you want, and you go out. Because even sometimes if you have the spike you catch, you get the profit. Sometimes you can program it with a limit that you go automatically out if it reaches a specific limit. that is also good. And then you have done your trade of the day, or maybe you do look at other positions, but be not greedy. That is also a mistake. Or don't make 3 or 4 trades or what on top of another to follow a trade. All dangerous. So do just calculate one trade and predict the future. That is your whole job. If it doesn't go as you think, so you can see here, it goes every time down here. You can buy a buy here, but if it goes lower than, for example, the other there, you go out because it didn't work. But if it goes to S1, you can maybe try to go in again and hope it goes up to PP for the end of the day, maybe with the American Open. So these are all things you can try and look at it and look how it behaves. Every chart, this is Euro USD, this is Euro Yen, and this is Dollar Yen, behaves different. And if you look at for not a week or 2 weeks, years, you have to look at it, you will find a way that it reacts on the news, etc. So also you have to look 24 hours almost to Bloomberg and news, what is happening. So I have the time, I'm trading for maybe 10, maybe 20 years now, looking at the chart, not 20 years, maybe 15, maybe 10, 15 years I'm trading. And you always look what's happening. Evening before you sleep, you look, you make your positions. Sometimes you get rid of all the positions. If there is a tumult on the market, if there is an intervention, you go out everything and just wait. Sometimes things don't work out as you expected. Sometimes they do. It is like a roller coaster. And that is exactly what trading is. I also look with a different eye to stocks, but I can talk later about this. I don't want to talk about it now because there's a totally different way. FX is really the way to the good thing about learning FX is you learn patterns. You see the candles, you see the way a stock or money moves, and you get a feeling from how things move and what are the limits oversold. So this is the best lesson. And if you use the Euro USD and not some sort of exotic pair like Zambian dollar against some Mexican something, if you use the Euro USD, it's the most traded, you can see the feelings, you see what's going on. And also the easiest way to get money, because the easiest way to get news, because all the news channels are looking at the euro. So the good things is euro, dollar, yen, those three, and maybe some pound if you like it. So these 4 or 5, maybe another currency, are the ones you have to focus on. I look always to the yen, but I don't make trade with yen, euro, or yen, dollar. I only do Euro USD because I have 3 periods. Because Japanese also trade a lot of Euro USD, the English trade Euro USD, and the Americans trade also Euro USD. So I have 3 chances during the day, and you have to. The more people there are, the more it will align to statistics of the behavior that is more predictable. If you have a small market with a few people, with few institutions, you don't know what they are doing. You cannot predict it on statistics. This is all about statistics, market sentiment, etc. Now, the bigger your market is, the more people trading, the easier it is to predict it. And if the parties are big, you can easily predict a little bit, listening to the news and listening to information, how the market will react. So you see that I have these 3 indicators, and below it here also 2 other indicators, the MD and SRI, because people are using those. If the RSD is really low, you know it will go up. If the MACD is at the, you see sometimes with the MACD, you see 3 bumps. I can maybe show it here. Sometimes you see three bumps here. Oh, I cannot show. Wait a minute. Let's do it like this. You see sometimes 3 bumps here, and then 3 bumps below. So look at those patterns. Look at the behavior of the MACD. Look at the behavior of the SSI, and learn how this behave. And learn. You can see here the MAC, the Bollinger Bands is sticking to this. Yeah, so I found the perfect values for the Bollinger Band to stick it. How do you do it? You just change it, wait, and you do 2 weeks, 3 weeks ago, you look you scroll back and look if it will fit nicely to these Bollinger Bands. So if it, look here, it stops here, it stops, sometimes overshoots, but doesn't matter. If it is 90% of the time or 80% of the time, the Bollinger Band has a meaning, you can use it, because it will not change. These Bollinger Band settings and pivot points will not changed because it is an average on trading. So now if the Bollinger Bands come to each other, that is also a sign that the market doesn't know where to go. And if they are wide, something's going to happen. There will be a pivot point. It is all about if the market chases about pivot points. You can see, for example, here it hits here the Bollinger Band, it pulls back to the middle, and also the Bollinger Bands have 3 bands on the middle band. Then it goes to the lower side of the Bollinger Bands, or does it even make it? In this case, it didn't. It overshoots it even. So, but it went perfectly. So it here went from the top from the Bollinger Band to the end. But you see, the form is different. So in reality, it is not from here to here where you think. People think in time. So the top to the bottom is big, but the top here, if you wait, the bottom is coming up. You can see that the bottom is going up, and here, poof, there's the bottom. So this small difference here, from the old S2 R2 to the PP of the next day, that is the only profit. That is the only from the top to the bottom. But if you look normally at the top of the bottom of this this channel you think it is 4 times or 5 times bigger, but that is not real, because if the clock starts, you enter your trade, everything is still moving, and if the bottom is going up and go fast up, it means that you will not make it. You cannot go out here because it never will reach there. It will reach the collision is much faster. And look, it collides exactly with PP. There, I would normally go out. So I will go out in here with R2. I will go a sell position. I wait. The next day, I still wait. And here it hits. I will go out here a little bit before. Now it goes more down. Okay, Shogunai. So, but here I know the next day it will go up. You see that it will go up, and I think it will go up the next day or the same way. So I can make here a new trade. Now, luckily it hits the Bollinger Band again. Now it goes down. Now it doesn't go down. I wait. But at the end of the day, the next day it hits the PP again, and that is lower. So I can still do get out of it. It is also sometimes the best way. Can I get out on time with a little profit? And all those little profits, if you trade 2 or 3 times a day, it counts up. If you can trade 200 days or 150 days a day with a small blind profit, is still a big profit. Now, you are not, if you have the time, you have to do the whole day. You can do it. There are people, Japanese traders, that does it with millions of yen, and they make a year salary in 2 or 3 hours. But they look for the specific combination of things that they know. Okay, now this one is perfect. This candle is shining that it will go down. So they will start here with a big position, and they go out probably here with a few pips. But if it is a lot of money, they go out, take the money, and that's it. And they only do a trade for half an hour or maybe 2 or 3 hours, and that's it. Some people only say you only trade for a few hours because they trade on hour candles. So the institutions looks at always wait until the end of the hour, because institutions and those guys who trade with the big money, they look at hourly candles. The small candles has no meaning for them. And it is also so that there's not information enough in the candle to make a prediction. The smallest candle that you can make a prediction on is around a 1 hour candle. The other spell is all scraping, is all wishing, not predicting, but the prediction is only in 1 hour. I found this out with long tests. I tested 10, 20, 30 years of data, of logical data, candle data, and processed it. My conclusion is you need to do an hourly trade, so you can only have 12, 24 candles in a day. And you have to find a specific pattern, or it has to go in the specific statistic advantage that you can make a profit. And if those 24 don't go in that position, that day you don't trade. So in reality, I will trade not every day. I only trade when I see a real. Now I will not trade because it is really you can see it is in a range, so it is not interesting. So I will go examine forward stocks, read on stocks, or look some other news, or look what is going on in the world with economy, or write a book or something else. But I always have one eye on the stock market. If there is it sinks down, then I think, oh, maybe it goes up. Then I look more interested to the FX, and then I make a plan. I look every data again, and then I'm go into a trade or just wait, or set a point that it automatically goes in the trade if it hits a specific point. And then if it is in the point, I set it also my automatically point that it goes out the trade. Sometimes I stop it or I go further, more faster out. If it takes 2 or 3 or 4 hours or 5 hours to get at the point, probably your prediction was not right. If you have a good prediction, it will come in 3 or 4 hours. If it takes 7 hours or a day, better to go out and take your profit or take your losses sometimes. Because prediction you can only do in a day, because you don't know if a war starts or some financial problem starts, and you make this perfect prediction. This is if nothing happens, it says it. If nothing happens, this and this will happen. And when you make the trade, 1 hour or 50 minutes later, there is an earthquake somewhere, and the whole situation changes. For in Europe, there's an earthquake. Boof, the euro goes down, the dollar goes up. Bam, and your whole prediction that it would go up, it goes down, is wrong. So always be careful for that. Also do stop losses, or don't do stop losses. It is exactly what you like or don't like. I don't like stop losses, so I never use a stop loss. I just kill it myself. And so this is it. So let me shut down this sharing of the screen, because I don't need it anymore. So, okay. So you saw now a little bit about the screen I'm using. It is not high tech. I made a screen with AI tools. I made a very complex software with indicators, with automatic warning systems, prediction lines, Fibonacci rates. You can name it whatever you want. I put it in it. I tested. It took me 2 years with all data. I downloaded from a site, and I got 2 years candle data from 5 minutes, and I did it for all pairs there were. And I wanted to know if I can predict candle patterns, first recognize candle patterns, if there is something in it. And the conclusion was 50-50 or 51-49 or 71 if you're really careful. And this 71, if you want to get higher, you have to do only 1 or 2 trades a year. No, that was not interesting. So I found out that in reality, all the indicators are based on a few mathematical formulas, and those are found back in Bollinger Bands. Those are found in pivot points, and those are found in the most of them, or combination of them, is in Ichimoku cloud. That one is very interesting. That has a lot of formulas and indicators in it, and crosses that are interesting. So if you use those 3 in your chart, and you look at it and you adjust the indicators your signal or your currency or your currency pair moves between the Bollinger Bands, and you look at the Ichimoku, if it makes sense, that if it stays above it, it goes over, and if it crosses, it stays in. So if you look at it, it works. You look at the pivot points. If it also is working, that is 90% or 80% of 90% of the time, that it follows that it always visits the pivot point during the day, then you have a chance that this system will work. And this is not because the currency abides to these formulas. It is because people that are trading uses one of those 3, and those are the 3 famous ones. So 90% of the people using it, and also for MACD and RSI, 90, maybe 100% uses these indicators. So if those indicators scream go out, they go out, and hey, I see it goes out. So you follow what they are seeing. So if you can know what they are seeing and how they react, and that is all you will do with indicators. You look at the pair, and because Euro USD is traded the most, and the most people they don't use specific traders for specific that is made for their company or some wizardry. They use the normal. The average will be aligned to the normal indicators that are the most popular and the most used. Some VWAP or whatever. Those are sometimes in trend, and then not trend. You have this 3 bounce stuff and all kinds of stuff, the golden cross. But the basic everybody uses is Bollinger Bands, because it is oversold or undersold. Moving averages. I sometimes use 3 or 4 moving averages that are aligned to Ichimoku. Still, Japanese use Ichimoku, and that is interesting always to look at. it gives you a sign when to trade and when not to trade. That is the only indicator that does this. Now, MACD is handy, but these are slower, and RSD is also defined. This is almost the same as your bowling balls, but it is an indicator that can help you to reassure that if you do a trade, it is okay. And if it goes, the RSC goes against you, you go out. So all these 5 or 6 indicators I have is also used for when to go out. If it doesn't follow the prediction of what the indicator tells, you rather get out. And if it follows it, you stay in, and then you find 2 things. You find a point where it turns, where it doesn't follow, then you get out, or you think before you make the trade, I want to have this amount of money for this, so much percent of my, but normally it is an amount of money. If I can make amount of money with the trade today, this money, I'm okay. And if you have a goal for a month, so you look, if you have this money with this trade, you go out. The people say, but it is, sometimes it is nice to make more in a week. You can try a little bit, but sometimes you have 3 good trades and you have 4 trades that is so bad that it erases all your profit. So be humble. That's also always. So if you can make every day a little bit of money, at the end of the week, you have a little bit of money times 5. That's better than to have 3 times a good trade and 2 times bad trade. In the end of the end of the week, you have less money than you started, or the same, or a little bit more. So it is better to have a successful trade. And if you say, I'm happy with this amount of money that I can make in a day, that's it. So you do it, then, I've done the trade, I made my money, and you do something else. You look at stock, you analyze other charts, or you for the next day, or you look back from, is it still working? Must I 10%? But normally, if you trade 5-6 years, you can just look at the chart. You can, okay, I still have to wait. Today it is probably not going to happen. So I wait. Then the PPI comes, or some indicator comes. Then you look at it. It changes the market. Now there's a Fibonacci pullback because it is oversold, or it was too enthusiastic going up. You think it will go down, so you take a sell position, you follow it down, think, okay, 50% or 60% I already reached. Normally there it will wait. Now you go out, and then you make your 30% retrace, and that normally is maybe enough money for a daily trade, or and then you do another day. Sometimes you have days you cannot trade. So what I said, sometimes 3 days you can make a nice trade, etc. 3 trades per week, or sometimes 4 trades per week. If you hit your goal money, is sometimes already that is all doing. And this way of trading, you get almost 75-80% of the time you're correct. Yeah, of course you can trade more, but then you will be more non-correct, and this will cost you money. If you are good at it, if you can go out with diligence. So okay, this doesn't work, go out, go in again, go in. So some people can do like 10 or 20 trades a day and still are positive because they have this discipline. I don't have it, so I wait for a perfect situation. I go in, wait until I have my goal money, or if I see something happening, or there is news coming, then I go out, cut the profit, sometimes cut the loss, but try to avoid that, and then it's done for the day. Or I wait for another. So I said I have 3 periods. I have the Tokyo time, I have the European time, and the American time. So I have 3 chances. I always look. Sometimes in the morning, if I under the PP, it will go up. It is a pressure. So I go up when the market's open in Japan, and now I follow up to the PP. I go out both. And sometimes Europe doesn't know what to do, so I wait. And it's more sometimes setups for the trade for later, after Europe is going down, and the reaction. I trade on the reaction of America on the European trade. Sometimes I trade on the reaction of the Europeans on the Japanese trade. So, and sometimes you can do a trade from the reaction on the Japanese on the trade that happened yesterday evening in America. So you do reaction trading. That is maybe the best thing. And that is the easiest way, because if somebody pulls it down, somebody will push it up, and somebody pushes it up, somebody will push it down. And that is why you get this zigzag. A price never goes in a straight line to another price. There are always ups and downs. And that is also a secret. So with ups and downs, you can make money. If it goes with a straight line, you cannot make money. Maybe you don't understand it now, but later you will understand this. So you have to take advantage for the ups and downs and ups and downs and ups and downs. Those are the places where you can easily make money. Because if you know that at the end it will go up and it goes down, you know, okay, it can go in. Whatever happens, it will go up. Because my long-term prediction is going up. So if it goes down, I make a position that goes a little bit more down, and then it goes up. I can take profit. That was a safe trade. Yeah, safe. If your whole thing is like it goes down, and you go up, you think, oh, temporarily it will go up again, and then it will go down. That's dangerous. So always follow the long term, the daily trade or the weekly. So you looked at the monthly, weekly, daily, and then you trade the 4 hours is sometimes indication what it will do with the day, but you trade on the hourly. And if you want to really go greedy in on the specific point, or you go to the 5 minutes or the 15 minutes. But if you want to go out at that time, that is only for the knife to specifically define the point to go in or go out. But normally it is not a big, you don't will make more money or less money with this. So you just have to look at the hourly trades, the daily, weekly, and monthly. Make your plan with those charts. So you know, okay, everything indicates the weekly, the daily, the monthly, at least that it goes up. So in the hourly time of I can trade, you only trade up. So if it goes down, if it goes up, you wait because it's already going more up. You want to find it down. If it goes down, then you know it will go up because the long term is up, and then you enter at the down with all indicators, and then it will go up at the end of the day or after a while. So that is how I trade. So I look for the more than 50 or more than 70% chance that it goes the direction that I can predict. And if I'm a long time wrong every time, I stop trading for a few days, then re-enter. And normally, sometimes there are strange things happening in the market that goes against you, and you don't know what. It can be a player in a market that is manipulating the market, or something is happening you don't know. Maybe there's a war you don't know, or something news is missing you, or some sentiment is missing you. So just stop for a while. Again, look at the market, how it is behaving. If you understand, if you can predict it easily, just by looking at the chart, you re-enter carefully, small trades. Now, if it goes away, you increase a little bit to your normal average, and you start trading again. Until something happens, then you have to be also noticeable when to trade and when not to trade. Sometimes it's more important not to trade than to trade. And at the moment, I'm better at it not to trade than to trade. So that is good. So for the moment, you see it is all, maybe you cannot see it, but it's all dead. So that's why I can easily talk about this. And I look the whole day. There's a monitor here in my room. Whole day, I look at the currencies. I have behind me on the television sometimes Bitcoin running. I'm looking at that. I'm trading in it, but I'm just looking at sentiment. So I buy stock that are aligned to Bitcoin or Ethereum or whatever. So I know if the Bitcoin has reached a point and it will go up, I can buy more stock of that stuff. I use the same technique that I use in FX for the Bitcoin, and then for the Bitcoin, I don't invest in Bitcoin, but I invest in Bitcoin that has stocks that has a link to the Bitcoin. And I myself are a technical guy, so I've studied chip design and all the computer stuff. So I know about computers. It's strange enough, I don't really invest in those stock, but recently I do in Tesla and other stuff. I used to trade in with other stuff that has to do with electronics and with energy, because I also studied energy and telecommunications. So I know what I'm trading, but I'm very careful, because what I think what will happen is often not what's happening. So I'm very careful to trade stuff that I know. I know very much about chip design. I know a lot about ASML and TSMC. I'm not in that stock, because I think, oh my God, this will not work because of sometimes with AMD or with NVIDIA, I think, this will not work. And then it goes directly opposite, because some analyst says something opposite that is totally wrong. I think this guy doesn't know what he's talking about. But the market listens to him and that follows him. And in reality, later, it comes back and I was right. And then the stock will go up, but I'm already out of it, don't like it. So also with a lot of it AI, with it see that it spiked down, they think, okay, it is over, China will win, but it all recovered back to where it was. And also this market now, this has to do more with the currency trade with Japan, the carry trade. It will come back. The stock market in America will come back to what is now down around 20%. It will go up to 20%, and I think in 2, maybe 3 months, it will be back at this. In the end of the year, we are higher than we were before. If you just look at the chart, as I look at the FX chart, and then I look at the stock market. So my feeling says America will do better it will be all okay with AI. Still, there is not really a sign that it doesn't work. Also, I'm more interested now in rockets and space. So I'm also looking at those stocks. I'm used to be more invested. I'm still invested in it. So good profit, still going on. And now with SpaceX is interesting. Just be careful, because there are a lot of people that know what's going to happen, and most of them are wrong. So you have to really think, okay, if I think this and this will happen, and you take it in position, you have to have a long breathe, because it doesn't always go to a straight line. It will always go down and up, and you always see you're at a down point, or you are on the up point when you buy and it goes down. And you think, oh my God, don't go out. Wait. If your thesis is correct, it will correct. People will see it, or the future will prove that you're right. It will follow the path that you predicted, but maybe not in a week, maybe not in a month, maybe not in a year, but maybe in 5 years. So have positions. If you think this is what is going to happen, then you take a small position for the long time with a high return. If you're looking for quick returns, you have to follow the sentiment of the market. If there's a shortage of memory, you take the guess. If it's low the memory and you know it goes up, it is a misunderstanding of analysts. You buy, now it goes up, go back to the previous price, and you go out. Maybe you make 10% or 5%, but that's enough. Poof, next stock. You look at something else that is undervalued. You wait for a rumor, push it more down. Now you know, now it will go up. People will understand it. You buy it. You wait until everything is okay, and it will go up again. So sometimes you can predict a spike up. Sometimes it is not the case. It goes more down and it goes to zero. There's always this risk. So don't use the full amount of your portfolio. Think about, like, my important stocks I'm in is 50%. Then I have 50% with that I can play a little bit. Then it's for 20% high risk. 30% is a little bit of risk. So you have your long time vision stock. There's more investment. That is 50%. 30% is stock you know will go up, but slow, but it's okay. And then you take the last 20%, or maybe 10 or 15% is volatile stock. You bet it goes down and it shoots up. Now you sell, and then you look for another stock. So you have this high volatile, and if you have this combination, you can finance with the high volatility, you can finance your middle stock. And if you have a lot of profit of your middle stock, you cash that out and put it in your investments. If your investment hits the bottom at a low, you have to buy, and you have to buy times. You sell your middle stock that's profitable. Buy this stock that you really know that will be in the future okay, and you buy it cheap. Sometimes you have to wait a year to make a profit again. But that you accumulate investments in your investment stock. That is my idea with stock. Is I try to accumulate as much as possible of a specific stock, and I use other stock to make money to buy more of the same stock. So the easiest is that the stock that I think that I want to accumulate becomes very cheap. Then I buy a lot of it, and then I'm done. That will be. And also you have a goal. I want to have hundreds of 2,000 or whatever amount of that stock. If you have your goal, bam, that's it. Put it aside, and then look for your next stock that you think that the future will be, and try to accumulate that. If you build it up during your lifetime, I think you're guaranteed a good pension. But so also I think people have to start young. Look at the market, look at investment when you're 24, at least at 30. Start trading maybe with your 40. When you have money that you can lose, and keep on trading till the end. But be careful. Learn the lessons that you don't blow up your accounts. I blow up 2 accounts or something, but there was not much money. Play around with small accounts, demo accounts. Maybe you do an investment of $1,000 or $2,000 and try to do trading for a few years and see it as a learning money. Sometimes it is interesting that you really trade with money just to learn how to trade with real money. And that is everything costs money. Yeah. So also trading, blowing up an account, a small account, is a learning experience. You cannot learn that in a book. You cannot learn that theoretically. You have to do it. You have to fight. Oh my shit! I lost everything. That's the only way you can do it, is to do it and to experience it. And you find also out it's all sentiment. The market moves on sentiment, on feeling, on herd mentality. And you read books about it. You find out how to be more cool in this. But you also know you can be cool, but if the market isn't cool, you have to still know what is the market feeling. So, Phil, my dog is a little bit crazy. So this is important. And oh, the dog wants to eat. I think that's the problem. So with FX, etc., indicators work not that they predict the future. They predict the behavior of the people that look at the indicators. If you have indicators that says sell here, buy here, or react on this or react on this, you can expect a reaction if an indicator is at that point. And you have multiple indicators that have the same, in the same time frame, the same signal. You can assure that people will react on it. And if the people react on it, the price or the movement of the market will react on it. And that is the secret. Indicators don't predict anything. Indicators is just a signal to people that use them, that trade this thing, and you can see what they are planning to do. They say, oh, if it hits that, they will go all out. So I go already out before it happens. Or I go down. If they sell, I make a sell order so I can take the profit that everybody goes out. So use the indicators not to, oh, it will go up. The indicators indicates go up. No. You have to think, what are the people thinking using this indicator? They see, oh, it is oversold. I will go up. I will sell the stock. Or I will sell the stock, or I will sell now for the FX. You look if they're really selling. You see the movement beginning. You also have to look out that not somebody else is doing the same thing as you and you're just buying. You see that the market is reacting on the indicators, on multiple indicators, and you make your trade and you follow it and you go out before everybody else thinks, oh, it will pivot again. So you only take a small piece of the movement, but that movement is guaranteed. Don't ride out the max up, the max low. Nobody can do that. But you can do maybe 50% or 30% or 60%. Take the 60%, that is guaranteed. And that gives you the 70% or maybe 80% successful trading with every trade. That is my story today. So what is it? 45 minutes. Hope people will see it, that it works, and they have to work. They have to learn it themselves. Don't listen to other traders on internet or even to me. Experience itself. Look for the four common indicators. Look at them the whole day, at least 2 years. You have to look at least 2 years so you can predict the market. Look at the time frames. Play around. Read books. Have a demo account. Small account, maybe for a few $100 dollars or euros. Play with the money a little bit to see if you can predict it, when to go out, when to go in. Do it. And if you do it later, when you're older, you can easier predict the market, and you can use this prediction of the FX market. You can use in the stock, you can use in Bitcoin, or you like to do it in Bitcoin, then you can use it. But I would say use the Euro USD. It's the most traded thing in the world. You can later use it. I use it for gold and silver. You can use it for other activity, for other things. It is just the behavior you will find out of those indicators everywhere. Everybody uses the same indicators, the same basic statistic indicators. And if you know that how the people react on those indicators, on those statistics, you can predict what the price will do. You predict not with indicators the market. The indicators you use to predict what the people will do with the market. That is the thing I want people to understand and to learn about indicators.